So we know credit cards are widely used in Canada, and based on Payments Canada CPMT, the Canada Payments Method and Trends Report, we saw that in 2018, credit cards volume, so the number of transactions, overtook debit cards for the first time. And they have been growing a lot since then. Well, especially with the pandemic accelerating the use of digital payments. So in the next 45 minutes, we will look at the growing challenges to the dominance of credit cards and the role of alternative payment methods, or APM. So we don't have enough acronym in our industry. Here you go. I'm throwing one more. APMs, not ATMs, but APMs, alternative payments methods. And we're going to see how, they play a role in the shifting the landscape. So 2 big questions we're going to answer today. How will alternative payment methods meet the growing demands of consumers and merchants? And how can tailored payment technology increase revenue and customer loyalty? So since we only have 45 minutes, we are going to jump into introductions and discussions right away, but we will save time at the end for your answers and your questions. You can see you have asked the speaker. I think we are on the 3rd day of the summit, so I think everyone pretty know how it works, but I'm just going to say it again. You can see you have asked the speaker box on your right side of the screen where you can ask me questions, where you can vote also for questions. So we're going to look at this part to make sure we answer your questions. And there is also join the conversation. So it's another box where you can add any comments or anything that you want us to elaborate, or you want to be part of the conversations as well. I know also there is a place where you can ask questions if you have technical issues. So also, if it's not working, if you can't hear me properly or you cannot see us, I encourage you to click here, and you will see you will have some supports that are going to come and help you right away. So let's try to start, and I'm saying that we are delighted to share the stage or the screen, whatever we can see now, with this panel of experts on alternative payment methods. And I wouldn't mind for each one of you to introduce yourselves, but also, to say a little bit like what are you in this part of the world of alternative payments methods? So why don't we start with you, John?
Sure. Hi, I'm John Parsons. I'm the Vice President of Gaming for Trustly in North America. I have over 20 years of experience in the gaming industry. I got my start in the brick and mortar space with land-based casinos, where I served with some of the largest gaming companies in the United States. I then transitioned to online gaming based in Europe, specializing in VIP, CRM, and customer success solutions. In my current role with Trustly, I help companies empower their customers to easily pay across any online device through our verified platform. We help simplify one-click payments, whether it's for deposits or withdrawals, through Trustly's open banking platform, which leverages direct API connections to the end user's bank and ensures that merchants never have to worry about chargebacks.
So what do we go with you, Hanna?
Hanna Zaidi. I'm the Chief Compliance Officer of the payments business at Wealthsimple. So I've supported the launch of Wealthsimple Crypto, Wealthsimple Cash, and I'm focused full-time on our payments business. So I also advise early stage fintechs on their go-to-market strategy, and I spend a lot of time advocating or mostly complaining about open banking and payment modernization. So,
and what about you, Wade?
Yes, good morning. I'm the head of Canada for Affirm, and I've got the swag today. So Affirm is a buy now, pay later company. We're headquartered in the United States. The company was founded in 2012 by Max Levchin, who is one of the co-founders of PayPal. We're operating in the US, Australia, and Canada at the moment. And our Canadian business was acquired about a year and a half ago through the acquisition of PayBright, where I was the CEO. So we have about 250 people in Canada. We have 11,000 merchants in Canada and many hundreds of thousands of users. And our business involves partnering with retailers and allowing them to offer installment payments at the point of sale, whether online or in store. And you might have seen us at retailers in Canada like Apple, Samsung, The Bay, And in the US, we work with Amazon, Walmart, and Shopify.
Well, you see everybody like a big panel of experts. So that's going to be a great conversation. Thank you, everyone, for introducing yourself. So let's begin with the question number one, and let's bring a little bit of context into that conversation, and especially on alternative payment methods. So what are they? What are APMs? Why, are APMs important? And why are we talking about it today? Like, why are they growing? So I wouldn't mind to start with you, Wayne, to tell us bring a bit of colors around what APMs are.
Sure. So I've always thought of it as payment methods other than sort of long-standing mainstream payment methods. Certainly in Canada, that's credit cards, as you said at the opening. I think for in-store purchases, we would also put cash as a legacy payment method. And then debit cards, you could sort of look at it either way. I consider debit cards to be a very mainstream payment method in store for a long time. You could make the case that they're an alternative payment method still in online, where the growth of debit cards is still occurring through Visa and MasterCard branded debit cards. But let's say credit, cash, and debit are largely mainstream. So then everything else I consider to be an APM. So e-wallets, prepaid cards, mobile payments, buy now, pay later, which is what we do, various ways of linking directly to bank transfers, all of that stuff. And, I think if you look around the world, Canada is actually one of the most sort of legacy and mainstream markets in terms of the choice of payment methods that Canadians have, as compared to Europe, Asia, even the United States, where there's much greater diversity of payment methods. But we now see Canada heading down that path. And I think it's really all about consumer choice, consumer flexibility, allowing people to pay how they want, accessing new customer groups that may not, be using or as deep into the mainstream payment methods. And in doing so, merchants can access more customers and bring that greater flexibility and choice and see benefits for their businesses as well. So that's kind of how I think about it.
I like the customer choice. I'm always pro, choice and making sure we bring what people need in the market. Hanna, do you want to weigh in a little bit on bringing some context around what are APMs? Why are they growing? Why are they important?
Yeah, so that was a really good definition from Wayne. In our research, it's interesting because APM is actually in many countries the primary way where people pay, and like Wayne mentioned, in Canada we're lagging a bit, but we're seeing, with the pandemic, we saw the rise of customers demanding better ways to spend, send, save, and we saw this through Wealthsimple Cash, which is our peer-to-peer payment platform for instantly sending money to friends and family. We saw that many of the traditional incumbent options, lack transparency, they're expensive, they have high fees, interest rates, etc. So we're, offering Canadians a more social and secure way to send funds. And I think similar to the trends that Wayne is seeing, in offering these alternative methods to like credit cards, for example, or cash, we are seeing new users new segments of customers that typically don't have access to those types of services or payment methods now coming into the fold. And this is their primary way of transacting, which is obviously longer term. And you see this with Gen Z, the younger cohort of millennials. I think it's going to be a really interesting trend to see over the next few years how it's going to change the payments landscape.
Right, I like when saying that new type of customer that don't necessarily have access to this, let's call them mainstream traditional payment method. What about you, John? Is there anything that you want to add and to provide some context on APMs?
Yeah, Wayne and Hanna really hit it on the head and did a great representation. I think it's funny, over the past couple of years, as we've been talking about alternative payment methods, it's nothing new, right? So this has been an evolutionary process since there was a time of us transacting. I have something of value and you want it. And so let's agree on what that value proposition is, right? And so it's a constant evolution. And the explosion that we've seen on alternative payment methods really maps out not only convenience but choice for the consumer, in that the traditional payment methods, the duopoly of credit cards or cash in hand when it's not possible, and now the explosion of online, it really accelerated by COVID, brings to the forefront. Not all or not few payment tools are going to work for all payment solutions, and there's going to be pros and cons. There's going to be very specific industry requirements from payments, but at the end of the day, trying to reduce the cost of acceptance for merchants and for the consumers, improving rates through transparency. Right? It's not this mysterious box in the background that's making the decision of whether I can have access to my money or not. Now give me the control and allow me to understand what to expect in my payment transaction, or even from a withdrawal where I'm getting payment back to me. Really breaking down all of those barriers and putting the control in the hands of the consumer.
Yeah, no, that's good. And it's good that you bringing the power back to consumers, and that's good because I like to look at consumers and merchants and have a bit of conversation. So you, three of you, look at that. So the opportunities that it will bring for both segments. And I saw that there is a question for you, so I'm going to linking back for you, Hanna, on the consumers. But we look at both sides of the coins, and we're going to start with the consumer first, and then we're going to go a deep dive on merchants. So the first one thing, actually two things I like to look at. The first one is what factors and trends are actually driving the adoption of APMs. And it's kind of what you guys just talked about a little bit, bring those new customer segments and those people who don't have access. So I'm going to link that question that we have from the audience, Hanna. So what are those segments? So let's start with these questions, and then after that, I'd like to talk about the considerations that we need to take into account for a good customer experience. But first, let's talk about the type of customer segments and the factor and trends that are driving this usage. Sorry. So let's start with you, Hanna.
Yeah, I kind of wish I brushed up on the research that we did, but off the top of my head, the segments that we've seen are, people that we would typically consider underbanked, that may not have a primary bank account with the big five because they live in an area where they don't have access, or it's people who typically don't qualify for credit yet. Either they're under 25, they don't have a 3-year credit history, so they can't qualify for a credit card. So they're looking for alternative payment options to be able to actually transact online, because they still want to buy stuff online. They still want to interact online. So how do they do that? And, we're finding that we're able to capture that segment of the market, and then we're figuring out, how do we expand in this space and serve this clientele? Based on the research that we've done, we've actually seen that, the younger cohorts that I've mentioned, the under 25s, for example, feel like existing options in Canada are outdated, they're clunky, they're burdensome, they're expensive. You have payment methods that are now being embedded in social media platforms, for example. People don't want to feel like they're making a payment. It's just like, like any other transaction, like sending a text message or whatever it is that they're doing online. It's supposed to be very seamless. And so for us at Wealthsimple, a major priority is seamlessness between their Wealthsimple account, their bank account, any payment method that isn't instant. It just disrupts that feeling of seamlessness. So, we're at a point where at an inflection point that credit card payments, bank transfers, for example, may not meet the needs of these new cohorts in the world that we're living in. Other things to think about are, fees, availability, security. These factors are driving consumer adoption and should be taken into, consideration. But I think one of the things that I personally look forward to, and I know we are at Wealthsimple, is really improvements to the speed and convenience of the traditional payment systems, expanded access, particularly with the real-time rail, we're hoping that it launches on time in 2023, and we think that there's going to be many use case possibilities that can be built on top of the RTR that will benefit Canadians. More doubling down on alternative payment methods that we've seen in other markets that countries have been able to do.
Yeah, no, I agree. And actually, another segment customers, newcomers to Canada, was one of them 6 years ago, and it was not easy to get credit. No, it was not impossible, but it was not easy. So just that's also something that it's a big segment that is coming in this country. And I like to mention, obviously, the opportunities with RTR. The opportunities with RTR would be really, really enormous. And that could be something that would bring innovations and choice to the market. I'd like to turn to you, John. What do you think would what is beneficial for customers, and what would be the key considerations that we need to take into account when it comes to customer experience? So Hanna mentioned speed, mentioned cost. Is there anything else that you see, or anything else that you want to elaborate on?
There is. Hanna hit on a really great point in the underbanked kind of market, and this comes in many different flavors. But life happens. People make mistakes, and I think a lot of financial systems are set up in a outdated or archaic model that penalizes a person for an extremely long period of time for a life circumstance. And in today's world, where we have access to data that we've never had before, that we have speed of payments that we've never had before, we're able to move in seconds, but sometimes the financial industry is trying to hold us back for years. And there's a reconciling that's occurring with that, right? And so it's kind of happening in parallel, which brings me into when we talk about the segments. It's funny because when we do our analysis, segments start blending over. And I always like to use my mom, right? Because my mom 5 years ago would have never made an online payment, literally still had the checkbook, would write checks at a grocery store, was that kind of a person. In today's world, she is plugged into every outlet that she utilizes with online digital payments, able to access her bank accounts, but not utilizing the same methods. It's still my money, but I can now move it utilizing my security credentials from my own devices with my bank's verified security on the background. So I'm still in a secure environment. I'm still safe in what it is I'm doing, but now I can accelerate payments on my terms. I think the other piece is in the last 5 years, and I'll throw my mom into this group as well, is a lot of people are realizing, hey, wait a minute, I was paying for this convenience. I'm paying these exorbitant fees, $3 every time I touch my own money, $5 every time. There's all these fees because we could, right? There was limited options. Now that there's more options, the market is becoming more competitive, and the consumer's realizing, hey, I don't have to pay that fee, or I don't have to pay that fee in this circumstance, which is giving a different value proposition to the merchants and to the consumer, and allows everybody to reduce the cost of moving money as it accelerates in these platforms. So I think it's being sensitive to. In the past, we probably dropped everybody into a certain set of buckets and said, you kind of need to fit. I think what alternative payments does is kind of level the playing field and allow me to choose the one that's going to fit my situation for my transaction at that time, and still give me access to my money. And I think that's the key to it. But definitely the cost of doing that, and then the fraud that associates in a digital world. Everybody's always very aware. You're always very cautious. We all have, security software on our devices watching everything, but, fraudsters still become more and more advanced. And so they're looking for those more secure options that I can go into an environment that I'm safe. A lot of that's going to come with brand recognition and demonstration of capabilities in the market, and then confidence of the merchants as well. But yeah, it's funny. It's accelerating so fast in front of all of our eyes, and how it's happening. The consumer's changing, the merchant's changing, and the payments world is changing all at the same time. We're all evolving at lightning speed.
Yeah, tell me about it. It makes my job very entertaining.
Nice.
on going this thing, you're right. We've seen on the research that we conduct that like the hardcore people who didn't want to touch contactless or didn't even want to put their banking details or card details online, like really grew during the pandemic. And just on top of my head, I think for the people who were 55 plus, I think it grew from like 10% or 10, something around that since the beginning of the pandemic. So it's pretty significant. People are just now okay with the things that were sometimes ad hoc, they were doing from time to time. Now they are okay, and it's their way of paying, and it's kind of expecting this. You touched, as both of you, on cost and affordability. I think it's also a big theme that we've seen, right? Where economically it's not easy, and it's just going to be like that for a while. So I think that's something that also is important, and you touched on it. Wayne, anything else that on the consumer, like kind of customer experience or the trends or things that you've seen that you want to add to the conversation?
Yeah, I think just to pick up a little bit on what's been said, one thing that we talk a lot about is the pros and cons of credit cards, right? Is this long-standing dominant payment method. So on the one hand, a credit card is a ubiquitous, universally accepted, incredibly easy to use, acceptance network, right? And that's great. But it's paired with a financial instrument that has serious downsides, right? If you have a grace period, but then if you don't make a payment, you're into this world of revolving, compounding interest, late fees, and you can basically refinance your debt virtually ad infinitum, right? And there's a lot of people that get into trouble with that. Something like 40% of Canadians carry a balance on their credit card each month. And not to annoy any of our bank colleagues who might be listening to this, but the perfect credit card customer from an issuer's perspective is someone who makes the minimum payment every month, right? Doesn't go delinquent, but pays vast amounts of interest. So we've got this awesome acceptance network paired with what I consider to be a flawed financial product. And so that has created opportunities for, alternative payment methods to say, there's a better way to do this. And to use the buy now, pay later example, we think we can give someone an instant unsecured credit at the point of sale, but which has a predictable payment schedule, no revolving account, no compounding interest, no late fees. And so we're helping that customer achieve something with credit, but without the downsides of the credit card model. So this is just one example of how the gaps in the incumbent payment methods create the opportunity for consumers to benefit from APMs.
Thank you. So really a lot of opportunities there and a lot of experience. Now let's talk about the merchants, right? So some of you talk about the merchants a little bit, but let's really go deep dive onto this, because it's good to have a new payment method. First of all, you need to make people aware of it, so the consumer aware to be able to use it. But if nobody on the other side is accepting it or is aware that this exists or is comfortable, with this type of payment, it's not going to work. So we need to be able to have the 360. So how are APMs transforming payments for merchants? So you talked a little bit about it, but let's go a little bit deeper. And my other question would be, what should merchants consider or when considering a new APMs? So let's start with you, Hanna, again.
This is a new space for us, for the Wealthsimple Cash product, and it's been something that we've been exploring and experimenting in a lot. So merchant partnerships have become a really big part of our growth strategy with Cash. We offer exclusive deals to Cash clients through the app, which we think is a win-win strategy for us, and the merchants and clients are able to come up with custom or bespoke offers, which isn't something that's new to the space, but I think that we've seen it in a way, we've been experimenting in a way that has been pretty interesting. But, one thing that we've noticed is it's true, the biggest barrier to adoption by merchants is not actually the cost of reducing merchant fees we've seen. We could even make it free, for example. It's actually the fact that if not enough consumers are using that payment method, it's just they're not incentivized to use this alternative method. So, even if it costs them more, they will adopt it because that's what their consumers are demanding. So, we've talked about this already, both John and Wayne have mentioned this, but payments are risky for both consumers and merchants, and without the proper safeguards in place. So I think an important consideration around any APM is, offering some sort of mechanism around chargeback, dispute mechanisms, what are the trust and safety resources that are available for both merchants and consumers? So there's recourse. And I think the challenge is, with some alternative payment methods, that's still very nascent. And so we're quick to sort of adopt those, some of these other safeguards in place, which, we'll start to see, hopefully not, but we'll probably start to see the ramifications of that.
And actually, do you see, I have so many follow-up questions, but I have like in my head, do you see this more easier, I would just convince, let's just, don't have a better word now, for online commerce than more at the point of sale? Like, do you see more, do you see more there, right? It's
Yeah, I think so. We're looking at this from a point of sale perspective, which is a very different behavior than online. I think, our friends at Trustly or Affirm can better speak to the e-commerce perspective. But I think the lack of safeguards at point of sale, a lot of times these dispute resolution mechanisms happen after the fact, not literally in person at the point of sale.
Yeah, so let me send it back to you, John, like this question on merchants and also thinking about review on e-commerce versus point of sale.
So I think one of the biggest things that I reflect upon in our success in Europe and North America was about the value proposition with the merchant, and that we're not just a service provider. We approach each merchant as a unique opportunity to build a strategic relationship. And where I think we're winning, where other alternative payment methods are winning, is we're listening to the merchant. What does the merchant want out of this? It's not just simple, I want to process this payment, give me this payment, and we're done. It's all the other things that come with it. And Hanna touched on chargebacks. And so I think what you're seeing is an acceleration of risk modeling and engines that are defending the merchant from unexpected consequences. One is chargebacks. And we have a very robust risk engine that is proprietary, that we built over the years to match up to our industries that we serve. But it's guaranteeing that, will you stand behind the risk and protection that you're giving me? When a merchant understands that you have skin in the game, that it's not just about moving a payment and then whatever happens, that we're all in this together, we're becoming part of the ecosystem, then it's easier for them to also translate to the end user consumer. Hanna brought up adoption. If you're not going to get a higher approval rate if nobody's initiating the product, what do they understand? So making sure that we're co-branding and explaining the value proposition to the end user consumer is critical. That says, oh, this is good for you too, and here's why this is good. And again, it's all of the other pieces, right? It's kind of like, people talk about the recipe. If you leave out, was it baking soda out of the chocolate chip cookie, you're going to get an entirely different end product. And it's that same thing as putting all the pieces together that make sure that you can verify funds, that you can safely and securely transmit those payments. But then what's also the other pieces of this, i.e. data? One of the things that we pride ourselves on is matching up to regulatory requirements. And in a lot of our merchants arenas around gaming, there's a whole nother set of requirements beyond just payments, beyond just what the government is requiring of you, beyond what the financial system is requiring of you. Now there's a whole new regulatory body coming in who is concerned about protecting the consumer and making sure that this is happening in a safe and secure environment. But then what is affordability around this? And that's something that other payment methods don't always take into account, is, can the consumer afford to do this? Are we helping the consumer to make better decisions for themselves going forward? I think back to the 80s and 90s where, when credit cards exploded, you saw behaviors that were not healthy, not only for the consumer, but for the industry itself. And in making sure that we're bringing all of those to bear, again, in that strategic relationship with the merchant, that we're a part of helping with their success. We're not just an item that you turn on and off. We're here for the long term. And let's listen to your pain points. Let's listen to your specific needs and make sure that we're addressing those and connecting where we can and how we can to make it a better environment for everybody involved.
Yeah, no, that's definitely, I agree with this. Wayne, sorry, what about you? And I was just gonna say, how do you convince merchants to use buy now, pay later?
Sure. Yeah. Well, that's more or less what I do for a living, is talk to retailers and talk to them about APMs and buy now, pay later. I think there's a few key things that merchants are focused on or should be focused on. The biggest one is incrementality. So if let's say an e-commerce retailer today accepts credit cards and possibly PayPal, which is for years has been sort of like the other, the first online APM. Retailers want to know, okay, if my site is performing at X, like X revenue, X user traffic, X revenue per visitor, conversion, all those metrics. When I add Affirm or some other buy now pay later company, what's happening to those metrics? And so the conversation is around what should they see in terms of additional users from our network, and Hanna touched on the importance of network effects, on loyalty, so repeat purchase behavior, and on conversion. And the great thing is, especially in e-commerce, all those things are very readily measurable. And I would say 99 times out of 100, when a merchant turns on us, and I would actually venture most APMs, they see some kind of a gain. When we first went out to market with buy now pay later in Canada 4 years ago or so, we had a number of merchants sort of say to us, "We're not sure we need this because all of our customers use credit cards." And we'd say, "Okay, which payment methods do you accept?" "Well, credit cards." So by definition, all of your customers use credit cards. What about the ones you're not serving, right? So once you add an Affirm or a Klarna or whatever, you tend to see significant gains in all of those metrics I mentioned. And that's what's driven the really rapid adoption of buy now, pay later. Other factors that they need to focus on, obviously cost is important. How the provider reflects on their brand, is that customer experience and the whole end-to-end customer experience going to reflect well on that merchant. And then ease of integration, right? So when it's an integrated payment method, there's sometimes some plumbing to do to get it set up, and that can be easier or harder depending on which platforms they use. One way in which APMs can get around that to some extent is, virtual cards provisioned in an app, which can be used anywhere the credit card rails are available. So that's where we can tap into what I was talking about before, the universal acceptance of the card network without the financial instrument of a credit card. So a few thoughts off the top of my head there.
No, that's good. And talking about the universal acceptance, well, cash, right? And cash was universally accepted and still, and other payment methods grew alongside cash. So it is possible. I just want to remind the audience that you can ask questions, right? We are monitoring them. I do have one question that I'd like to ask everybody. And we talked about definitely there are a lot of opportunities. It is definitely growing. And definitely, there are a lot of opportunities looking ahead, and talking about having a affordability, like more secure, safe and secure, and how maybe RTR, can help develop and boost those different platforms. But definitely, you see those payments methods being widely adopted in Canada, even if we have still, a highly credited card market, I would say. But when do you think it will peak? When do you think, and what other opportunities do you see coming? And how fast maybe do you see it will peak? So let's start with you, Wayne.
Sure. So, I think going back to what we were saying before, like the opportunity here is maximizing access, flexibility, and choice for the consumer, making our commercial system as inclusive and as easy to use as possible. That's clearly a benefit to consumers. and it's clearly a benefit to merchants as well. And I would say, if some incumbent, let's say, card issuers might say, well, this isn't good for us, I actually think we're seeing a lot of issuers and other incumbent players innovate around some of these things, right? If you look at Visa installments or cards embedded within wallets, right? I mean, there are ways for the incumbent players to sort of get on board with some of these trends. And I think that's all to the good. I think the entire ecosystem benefits from this. I actually don't think there will ever be a peak as such. I think we will just see a increasingly diverse set of payment methods available. Every time we look at the stats, every year we're going to see more of a mix. And it will, I think, for many years into the future, be ever evolving based on innovation. I don't even know what exciting payment method options there may be a decade from now. And when RTR is here and implemented, when open banking is here and implemented, there will be innovation on top of that will, make things even better and easier in ways that, I probably haven't thought of yet. So I think this is just an ongoing open-ended process.
That's a great point. And in fact, if you go back thousands of years ago, you could pay with something with a handful of shells. And then it turned into, well, actually, I have a block of salt, or now I have, and so it's just constantly an evolution, right? And so I think Wayne's right, is we're just seeing the evolution happen. And with competition in this space, it is leading to innovations that nobody's seen before. Some of those innovations, it doesn't work. But I think the key for success is going to be partnerships. I think anybody that tries to go alone in this new world is going to find it very challenging. And when you become myopic, if we look at other payment methods of the past that were tried and true and were a standard of the industry that don't exist anymore today or have been greatly reduced, I think we all understand that we have to evolve, and it's better to do it in partnership, right? So I think what we're going to see, I think there's going to be a peak to what we're currently experiencing. But when that happens, I think you'll see the strategic partnerships happening. I think you'll see that evolution where brands are coming together and putting their powers together to create even better value propositions. But Wayne's right. I mean, traditional payment methods are evolving rapidly right now, and we're seeing new things out of them. And they'll continue to. They're very successful businesses, and they're very applicable in our daily lives. But that doesn't mean that there's not room for a better way, and not necessarily a better way for everybody. But going back to the beginning of these conversations is, it's not one size fits all. And so what is it for this specific consumer in this specific environment that's going to allow them to have access to funds availability in a consistent, repeatable, safe, secure environment that lets them transact the way they want to. So agree with Wayne, we're not going to see a peak. It'll change, right? So 5 years from now, we'll be talking about something that we weren't thinking about today because it's evolving. I think what is consistent is like this train has left the station, and it's just accelerating, and we're all kind of on board trying to make sure that we're navigating properly, right? So yeah, definitely exciting time to be a part of it.
Yes, I'm seeing a lot of questions coming up. So I just want to ask Hanna, do you see any peak, or do you agree? Otherwise, after I have some questions around risk and oversight, so get ready for those.
Yeah, no, I definitely agree with everything Wayne and John said. I think definitely don't see a peak. It's going to be continued innovation and continued change, and we're not even going to be able to sort of foresee some of the use cases that are, upcoming. And you can look at other markets as examples of this, right? Like if you look at Brazil, for example, where they introduced the PIX system. I can go on an entire separate rant about, how that was a really interesting move by them, and it allowed for a ton of innovation and consumers basically like migrating over to this alternative system in a very short period of time. But I think going back to John's point earlier, I think the thing that we're going to increasingly see is multiple payment methods that serve different markets and segments and use cases, rather than just having one or two predominant methods of transacting, whether right now it's like cash and credit cards or cash and cards. We're going to see multiple different methods of payments embedded in different places. It's just going to be way more seamless and way more custom to like specific segments.
Thank you. So I know we have like a few minutes left, but I see a lot of questions coming up, and there's two big themes. One theme is around crypto and currency, and if it's going to be, merchants are going to start accepting those. But the other one is around, and I'd like to tackle that actually, around the risk and the government oversight, and if you see if there is any standard regulatory, approval, like any standards, any rules that has been out there, or what are the risks that for the consumers. And I think it's more the risk for you, weighing on the buy now, pay later on the credit. So why don't we start with you? And then I know we only have 2 minutes before the stuff, but I just would like to tackle this.
Sure. Why don't I tackle the BNPL one? So, I think certainly the way our product has been designed is to be a much customer friendlier alternative to credit cards that eliminates many of the risks associated with credit cards. So the revolving interest, the compounding interest, the late fees, hidden charges and tricks, in the fine print. And I'm referring to both credit cards and private label credit cards, which have, lots of evils in our view associated with them. So we're very much focused on, transparency and building trust. And one thing to be really clear on, it is absolutely not in our interests for customers to overextend themselves, because we have zero means of making any money off that. So if a customer falls behind on a credit card, there is actually a way for an issuer to make money on that. If a customer does a interest-free promotion on a private label credit card and doesn't pay it off, they will face deferred interest and late fees. We don't have any of those things. So we absolutely do not want customers to fall behind. And so we focus very heavily on adjudicating every single transaction. And our data shows that our customers are staying on track. Our sort of delinquencies are very low. But I think there's a lot of misunderstanding and concern around buy now, pay later because of associations with other credit business models that are different from ours. I'll let someone else handle the crypto one.
Crypto one, or if you want to talk about oversight, if you want to follow up, that's fine.
Yeah, I mean, that's a whole separate conversation. But I can very, very quickly talk about crypto. I think crypto is in a really, really interesting space right now. So, help launch our the first securities regulated crypto trading platform in Canada, which is Wealthsimple Crypto. And now, thankfully, there's much more platforms that are now under the purview. But that's specific to trading. I think what's interesting is looking at crypto as being used as a form of payments and how that's going to be regulated. I think that's still up for debate. I think security regulators have asserted jurisdiction around all things crypto. And I don't know if that's the right way to think about things, because the use cases around crypto vary and the risk and implications of how that works vary as well. So I think we need to spend a bit more time thinking about the nuances around that. I think crypto being used as a form of payment is very interesting. There's a lot of challenges in the ecosystem around, just gas fees, getting fiat onto and converted and onto like a self-custody wallet so you can actually transact. There's a lot of barriers right now to entry for the average consumer. I think we're going to see that rapidly change. And that's going to be another form of alternative payment methods, because we're seeing some very, very cheap, very versatile forms of crypto that are now coming, and they're going to be used as a form of payments. Stablecoins is one, but I'll leave it at that because there's a lot to say on this.
Yeah, thank you. And I hope I can do one more question, because something came up on loyalty, and that's true. We didn't talk about that. Like the credit cards have loyalty points and cashbacks and all of this. So why can you see this, being competitive from alternative payment method? Why people would choose alternative payment method when they don't get the loyalty, the card, which we know that's one of the key reasons why Canadians are using credit cards. So just to finish before they cut us off, can someone wants to talk about the loyalty?
Yeah,
I can. Sorry, go ahead, John. No,
I was touch on that one, and I the simple answer is the credit card companies are paying for those programs by the fees that they're charging, whether it's the fee to the consumer or to the merchant. At the end of the day, those fees are always going to go back to the consumer. And so going back to a point that was made earlier is that consumers are getting smarter about this, right? They're understanding, hey, wait a minute, I don't have to pay this fee to do this and this and this to access my own money. And so the veil of, oh, but you get this and this and this. Yeah, but really, what is that exchange rate? And I think making sure that the merchants understand that value proposition and then communicating that clearly to the user at the end of the day, this was a better way to move your money. So you can save your own money, you can do those kinds of things. And again, sometimes I think it's a very thinly veiled kind of value proposition that says, oh, you get this and this and this, but you actually have to spend 5 times more than actually probably that conversion rate is worth. And I think consumers are getting smart to that. They're realizing I don't need to do this anymore.
All right, so I have to cut you off. I think we are at time. We could keep talking hours about this. I'd like to thank you all for sharing your expertise today. It's been really an absolute pleasure to be having this conversation with you. And thanks everyone who were listening to this panel. Thank you for your time, your interest, and your questions. We got a lot of questions. So I wish everyone a good rest of the day and for the last day of the summit. Thank you.